Hi, I'm Larry Schober, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago for your Thursday, May 30th, Traders Exclusive. Well, the big thing on traders' minds today is what's not happening. Consider the fact that now the Nikkei overnight down 5%, down 15% most recently, which theoretically puts it into contraction mode. We have a GDP report that was revised downward just a touch today. We had jobless claims that came out just a little bit higher than expected, and then we had home sales that came out just slightly worse than expected. Put that all together, and guess what? The S&P 500 is up again today. We're trading up towards that higher end of the trading range that we've seen over the past 2 weeks. Right now, towards the close, S&P 500 up about 10 points to 1660 area. Again, that's an area we've seen the band between 1640 and 1660. But again, it's what's not happening. It seems like we're seeing another rotation from the cyclical stocks seem to be outperforming right now. But other than that, I think all eyes are waiting for either the BLS report that comes out next Friday or either September 18th when some type of tapering narrative from the communication club from the Fed gets started. But right now, look at other asset classes that seem to be moving just as much or in other directions. We have the dollar, again, getting slammed today against all crosses except for the Japanese yen. The dollar's higher against that. But with three bad economic numbers coming out today and with news of tapering, more tapering, we see the dollar just getting hammered again today, especially against the euro currency and the Swiss franc. Moving on to other commodities, we had most of them outperforming today, but nothing really stands out except for perhaps copper, which is up about 1% on the day. Lastly, we're looking at interest rates, the 10-year yield back down to about 211 basis points on the day. It's funny, bond traders very, very concerned with the trajectory of yields. I mean, keep in mind that we've rallied in less than a month from 162 basis points to 216 basis points. Equity traders, on the other hand, don't seem to be very, very concerned about it right now. But again, the bigger picture is if we're going to have some tapering news, that maybe the market's starting to price that in. So at the end of the day, it's more about the speed of which the rates move and not the direction per se. I'm Larry Schober, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago with your Thursday, May 30th Traders Exclusive.